Hello, everybody. Happy Mother's Day. Make sure you take care of the women in your life. If not for mothers, none of us would be here. Happy Mother's Day, everybody. Happy Mother's Day. Happy Sunday. And oh no, the world is coming to an end. All you got to do is go on YouTube and they will all tell you it's over. Buy lentils. When you start to see the euphoria start going over there so that they can get click ad revenue with all of their catchy, cover pages to get you to watch their video. 15 minutes, 43 minutes, 2 hours. Fuck you. 12 minutes, 13 minutes, 9 minutes, 13 minutes, 10 minutes, 12 minutes, 5 minutes, 29 minutes, 12 minutes. And everybody wants to look like Joe Blow, your next door neighbor, so that you believe it because he's not some guy that used his passport and went across the world. It's all bullshit. It always is bullshit. It's bullshit, bullshit, bullshit. And I'm going to go over this really quickly. Not a lot to cover here because Wednesday is the day when you're going to get your answers. The SPX, we once again failed for the week. We opened the week at 41.30. We closed the week at 41.23, down for the week. That's the fifth consecutive time that we have closed down for the week. I'm going to show you this. This highlighted in yellow here are the consecutive sessions that we have closed below 10%. And as you can see here, 14.43, we're just there at 15.69 is how far we have dipped in this now 4 months of this correction on the S&P. The Nasdaq's been correcting since November, so it's already into 6 months. And it got down to, as you guys know, right around 25% down from the all-time highs, right back down to that really large wave one top, which it still has not broken back from September 2020 that I showed last week, that it just did not fit. In any case, here we are. We are down 0.18% on the month. We're down year over year. And more importantly, we're having these ranges here of 89, 53, and everything else is 100. There's an extreme amount of volatility out there. The VIX did close right at 30. And as I've shown you, and it's proven itself every single time, when you get the VIX above 30, you get a massive rally. The S&P Weekly is what I'm looking at here on Yahoo. I go to Yahoo Finance, I go to the daily data, and I go over here and I highlight and copy this. Open, high, low, close, and that's what I go over here and I put into my spreadsheet. Boom, 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 and then I just copy paste this, put it to the next line. All of my data shows up. Make your spreadsheet. And I'm telling you now, because this is the first week that we get the SPX on Thursdays. They start selling them this week. Next week is the first expiration on Thursday. You have the SPX expire every single day of the week. You want to look at Bank of America, you want to look at Roku, you want to look at NVIDIA, happy to give you the pivots, the charts, the view as far as where it looks like it's headed to. The SPX is a gravy train, an absolute gravy train. Ask Brett, ask DBs for Life. Gave them on Friday because I know these guys are active on the spread selling. When we were down there on the lows, I told them sell the 40-50 call puts. Sell the 40-50 puts. Free money. Free money. This week, we have export-import info for China. Obviously, it's going to be shit because they've been locked down. On Monday, we have Bostic speaking at 8:45 in the morning. Nothing else significant. On Tuesday, we get Fed speakers. Williams, Bostic. We got Waller. We got Mester. Mester's pretty damn hawkish. And anyway, it comes into the end of the day at night where you get Bostic again. But more importantly, on Tuesday, you get the Chinese CPI data. You get the CPI and the PPI data for the month of April. And that data is expected to be slightly lower. When you come into Wednesday morning, you get the US CPI data. This is where you are going to see a gradual drop in inflation, and that immediately takes 0.75 rate hikes off the table, which is what everybody was making their rally with on Wednesday. Come over here on the stock charts. Stock charts uses the same data that everybody else does. As you can see here on this green line, we're just holding it. We're 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 holding it. Come on down here anyway. We're here over a year. We're at this level for support. 1, 2, 3, 4, 5. As you can see, you got your 5 weekly candles that are red. Go anywhere you want to look. You're not going to find it again. You're going to see it here in COVID. 1, 2, 3, 4, 5. Come over here to the NASDAQ. 1, 2, 3, 4, 5. Obviously, it a decline. It's down 300 points, 370 points from that 16,000, or down 3,700 points from that 16,764 back in November of last year. Again, come over here to COVID. 1, 2, 3. Then you had the green doji candle, and then you had your fourth candle over here. Not 5 in a row. Here's 5 in a row. Come over here to the end of 2021. 1, 2, 3. 1, 2, 3, 4 over here in March, April, when we had the decline, as you remember, over in the beginning of last year. 5. Come over to the Dow. 1, 2, 3, 4, 5. 5. Even here, when you had this decline going back down to 33,000, which you can visually just see 33,000 right there. 1, 2, doji candle, 3, 4. 1, 2, 3, 1, 2, 3, 4, back in the beginning of November when the NASDAQ started to decline, blah, 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 blah. 1, 2, green, 1, 2. 5 in a row here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And all you're doing is dropping from 35.5 down here to 33. That's it. But then go over here and look at the FTSE. The FTSE all-time highs up here around 7,700. 7,700, and we're sitting here just under 7,400, down about 300 points from the all-time high on the FTSE. Is something going on over in the UK that's not going on in the US? That's not going on over in Germany? That's not going on over in China? It's not going on over in Japan? They're an island. Yeah, sure. And anyway, it's to show you it's not the end of the goddamn world. These guys that are out there on YouTube and on Twitter is so bearish, it's absolutely ridiculous. Can we go lower? Sure, we can go lower. How much lower? It ain't much if it is going to happen to be lower. And when that does come in there to be lower, it's going to be a face rip rally, just like you had on Wednesday, where everybody's going to be sitting there going, why in the hell am I short? If not that, they're all going to be saying, why don't I have at least a little bit of something for the upside? I'm going here on the weekly chart of the SPX going back to 1987 when you had the big crash. Okay, this is the 1987 Black Monday flash crash weekly candle. 1, 2, 3, bang, bottom went in. Had your bounce. 1, 2, 3, 4, 5. 5 consecutive red weekly candles. Almost a double bottom to where the original low was. And then where do you go from 1987? We're going to scroll through this and take a walk through the park, go through the dot-coms, go through the dot-com crash, go through 9/11 inside of that, go all the way up to 2008 where there was no recession according to Larry Kudlow, and all the way down to the crash below that. And going to show you here. You see your reds? You see any consecutive reds here? You go 1, 2, 3, 4. 4 consecutive reds. 4. Here we go again. Back here into 1990. 1, 2, 3, 4, 5, 6. 6 in a row in 1990. The reason why? I had just graduated high school. Because I graduated high school, the stock market said, that's it. We hit the peak. The best of the best is in. We got to drop. Come on out of 1990. Come on into, where are we now? We're in 1993. 1, 2, 3. Oh, here, I see 1, 2, 3, 4. Oh, look at this. 1. Oh, there's a green. 1, 2, 3, 4. Would have been 5. Come over. Oh, no, no, can't see it. No, nothing. No. Oh, here we are. Oh, 1, 2, 3, 4. Oh, here we are. 1996. That was when I quit my job as a CPA. 1, 2, 3, 4, 5. 5 in 1997. And when did I start? I started here in July as a broker in 1997. 1, 2, 3, 4, 5, right there and before. So basically, you could say, yeah, I got in at the bottom. 5 in a row right there in 1997. 1, 2, 3, 4. 4 in a row here in 1998. Had a green week, another 2 down. Boom, boom, boom. I don't have this wave down on this chart because I don't want to have all the noise. I can almost recall that this is the wave 4 before you went into the dot-com high. Here's your dot-com high right there. Bang, bang, bang. And then you come down here on the dot-com decline in September after it failed to break out above because the NASDAQ was already in the decline. And here we are in the SPX. 1, 2, 3, 4, 5, 6. 19, or this is 2000. 2000, 6 in a row, dead cat bounce. Here you are. 1, 2, 3, 4, 5, 6, 7, 8. 2001. Here you come right here into 9/11. 9/11. One down weekly candle. Bang. And then the bounce that went up above higher came back down to it. And here we are coming to the end of everything. As you can see here in your decline, 1, 2, 3, 4, 5. Another doji candle and then some down. Very few of you remember why this was happening back in 2000, 2002. I do. Here's your big bottom right here in 2002. And just for this illustration, I'm going to go ahead and show you since we're here. This is 77568. Boom, boom. You got your double bottom, as you can see here. Bang, 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 bang. Okay, so it's not. It is over here. What is this? 768.63. I should have remembered that. 768.63. That's your bottom right there in October of 2002. Boom, 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 boom. Here you go. 1, 2, 3, 4, 5, 6. 2002, 2003, we're talking here. Here's your 2008 top. I want to show you this one as well if we can zoom out a little bit. This is actually, no, we'll go here to July because I know this one for sure. 1555.10. And I'm going to extend it to the left as well. And then you come down here, and here you can see your 2009 bottom. And you see how you came down to the 2002 low? Right here is where the NASDAQ bottomed out. Again, counting red candles. It's exactly what we're doing here, and the reason why I'm trying to go through this. And you can see here, bang, bang, bang on the week, February, March, boom, back on up to it, all over. Look where you topped, just so you know. A lot of you guys already know this, but here's your .com top. Here's your 2008 top. All that was just one big flat. And then you went on to the beginning of everything. So here on to the beginning again, we'll try and zoom in just so we can see it. 1, 2, boom, boom, boom. Where do you go? 1, 2, 3, 4. Point being, you do not get consecutive red weekly candles without an extensive sell-off. Here is October of 2000 or of what do you call it? 2018. Here's your October dip, your November bounce, and then your December dip. 1, 2, 3, bang. Here's COVID. 1, 2, 3, 4, 5. And then here we are where we are. And so, again, going through here, you got your 1, 2, your perfect 3, your 4 bounce, and then your 5. 14.61%. That was there into the invasion of Russia, Ukraine, ABC. Bang, bang. I was warning we might have a big bear here. It obviously worked out to be a bear. And here we are now looking at this bear. You've got your 1, you've got your 2, you had your 3, you got your 4. We have a perfect from a Fibonacci count, from a wave count point of view, a perfect 5 waves down. Can we go lower? Can this here be a flat? Boom, boom, and then we're looking for a little bit lower. Yes, it can. How far down will it go? Not by much, because again, we've got that NASDAQ to be dealing with, and the NASDAQ is looking at that overlapped over on the September 20 at 12,440. It's just not there. It's unfortunately just not there. Can we dip lower? Yes, we could have a little bit of a dip below that 4062. Again, if you wanted to really go and zoom out here, you could, get down to around minus 4,000. Here is your 1 year lows over here from May. We go out here for 2 years and you can see it a little bit better. You might be able to get the 23.6 retracement back to 2009, 38.38. If we did that, if we did get down into that level down there, then all of this would wind up being just one big bear A wave. And then we've got the big bear B wave somewhere up into this 44, 45 area. And after that, yeah, sure, the shit is going to hit the fan. But again, you got to come back and have a little bit of knowledge to this, because why in the hell would the smartest man in the world, the richest man in the world, be going out and buying fucking Twitter? Why are all these companies that are making money, bottom line, on gasoline motored cars with oil all the way up there to where it is right now, and an industry that's built on gasoline rather than an infrastructure that needs to be taken and replaced with this brand new EV charging system all over the place? And here we are on this where we're looking at a wave 5 higher on that. It's just a situation that you come back and you look at, and you got to ask yourself and say, are these people completely full of shit? Am I completely full of shit? Well, sorry, guys. I've been doing this 27 years. I've seen bear markets. I've seen bear rallies. I've seen bear dips. I'm the guy over here pounding the table that we're going back to the .com 1550s. I'm pounding the table that we're going down to 2100. But it ain't here yet. This is not it. All that we're in is a nasty wave 4 correction. And guys are going to say, what the hell is wave 4? I don't understand this wave 4 stuff. Well, this is the reason why you study Elliott waves. You don't study chart patterns. Chart patterns, anybody can come up with a chart pattern. You give me a bullish one, I'll give you a bearish one. Here, you're looking at a classic completed 5 waves down. Looking here, that same support level, which is still proving itself. And just for shits and giggles, we'll go over here and see what they're showing on weekend Wall Street. And it is showing the Dow to be down 25 points as of now. Related markets, 64% long on tech, 53% short on Wall Street, 56% long on Germany, 50% short, which makes absolutely no sense whatsoever, because you're basically looking right now, which this is not correct, it's not reliable, but it is what it is, at a 8-point drop at the open when we get started. Wednesday, you get your CPI. Tuesday night, you get the Chinese CPI. Excuse me. Then we'll see what's going on. Catch you guys in the chat.